All right, here we are. It's gonna be it's gonna be it's gonna be a good day. It's alright day. It's okay. Haven't taken a trade yet. As you can see, this just looks like a lot of consolidation. A big wick here. We've taken the big wick into a higher time frame imbalance, and it goes all the way out to the 1 day, the daily time frame. We're still within this time frame here. It's Thursday, so a retracement makes sense. This is the daily time frame. This is the 4-hour time frame, and on the 4-hour time frame, we've got a fair value gap right here with the order block right there. Overlaps. Price hits it. We've got this big area here of imbalance on the daily. We've wicked right off of it. We've wicked right off of it. On the hourly, you can see we've wicked right off of it as well. Let me take all the drawings off. You can see. Oh, let me take the vertical lines off, sorry. Didn't trouble 50% of it. This is the hourly now. This has just been going higher. It's just been going higher. Retracement makes sense, right? So it's taken out a lot of liquidity. We've filled in this inefficiency here. So what makes sense now for the market to do some more damage to the downside? This looks like AMD of accumulation, manipulation, and then distribution all the way down to the sell side here. Sell side is what we're targeting now. We've got a few orders in because we want to get in on a very good position in the market. So I've got a few orders around this imbalance here that you can see up here, and that's on the 1 minute and the 3 minute, which is here. And on this, if we look at the 3 minute, you can see it a lot better here. So this is about consequent encouragement, and this is about, well, and this is obviously the 3 minute. And we broke this low right here. Oh, sorry about that. So we've, you can see it anyway. We broke this line. We broke this low here, fair value gap. This whole thing is probably an order block on a higher time frame as well. Fair value gap, just to go lower. So let this rise for 10 o'clock. That, in my eyes, should be my silver bullet, but we'll see. 3 minute, 1 minute. This is 10 past 10 here. So it's 10:02. We're just watching price. And I've got this area highlighted. We could have this whole area highlighted, but it is what it is. And we're not really worried, man, because if we zoom out on this chart right here, we can look and see what we're aiming for on the daily. And we're aiming for, like, you know, we're aiming for a lot of liquidity to be taken out, or inefficiencies to be filled in, like here, you know, or at least down here. This is all we're aiming for. So we'll hold it. I'm okay to hold it. If it hits our target before it retraces and hits our target, that's okay too. So I'm just going to leave this on here. Again, no music, quite annoying. Even when I was playing Kendrick Lamar, the concert, it just blocked it. I don't know what it was. So I'm just going to mute myself and let price play out. To give you guys an idea, I'm going to put this little position here, and yeah, just going to let price play out.
They got me feeling like I'm academics.
The freak off in the federal charges that Diddy caught on the Chris Cuomo show. Let's watch that.
About what you think and feel about Sean Diddy Combs and any allegations against him, given your history of animosity with him.
Well, first of all, I'm not calling you or nobody else to get nobody to believe anything regarding him. Like I said, I always say, me personally, I don't jump up and down and cheer for no black man going to prison or any other man, any other human being going to prison. Because people think prison is always the answer. I'm not saying a lot of people don't deserve to do their time and see what's going on. But at the same time, that's not no cheerful thing, because when you look at it, that man have kids.
Mm-hmm.
And whatever affects him definitely affects his kids.
Mm-hmm. And
I know there's a lot of victims involved in it, and whatever affects them affects their kids. So it's not a good thing to be talking about any shit about the next person. But it's not a gray area with me. And at the same time, Puffy didn't react or get where he got or doing those things or those allegations by himself. He was taught from people before him, and he did it to the younger people after him. And we can talk all day and say what's true, what's not true. But the true part about it is videos, conversations, and people can see what they've done.
Mm-hmm.
But for it being happy and proud and say what do people think, that's irrelevant.
So Suge,
It's just like I heard earlier today when Ray J was talking to TMZ.
mm-hmm.
I got love for Harvey, but I see Charles always got something negative to say when it comes to West Coast people. And Charles tried to make a reference to say that, how do I feel when I'm in prison? Yeah, I'm in prison. I guarantee you I'm free more than Charles. If I feel like sleeping to 5 o'clock, or I want to sleep 12 hours a day, I can.
Sure.
But besides all that, the fact is, it's not no competition who's going to talk the loudest or talk the best. It's not something positive that can help anybody. I don't get on no platforms unless it be something positive. If it ain't positive.
I understand what you're saying. I want you to try to make some positive points here. I get what you're saying about TMZ, but that's not really my interest, as you might imagine. My interest is in what you can help people understand about these allegations that Diddy is facing and what you believe he's facing on the inside. Now, what's most interesting to me is that you seem to see Diddy as kind of an Epstein kind of figure, that Jeffrey Epstein, that a lot of people know what Diddy was about, and they were about the same thing, and that's why they're quiet. That's why J-Lo and Ben Affleck got divorced, because of videos that he has of her that now they know about. Where is this coming from with you? What do you believe about the people around Diddy and what everybody knows?
Well, first of all, you got to start with at the top. You starting with the top. Clyde Davis, Russell Simmons, Andre Arell, Jimmy Iovine. Even if you take Jimmy Iovine, he had an allegation from him, same thing, it went away. You take Jimmy Iovine. They told me at Universal and Interscope, they said, you know what? We can't deal with artists that gets in trouble. And your artist gets in trouble, they talk crazy. They speak about what they see. Now, I was told that I can't do business there because of that. Now, Doug Morris gave Puffy a deal for millions of dollars. It flopped. So when you look at all these things and everybody want to say Puffy, 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 don't get me wrong. Yeah, Puffy stepped in this shit, and even if he wiped the shit off his shoe, it still stinks. But he's not the only one. They got all the tapes.
Now, when you talk about the tapes,
but this been going on for a long time.
Hold on, Suge. Help us understand, because a lot of this stuff is a little inside baseball for people, right? Because they don't live the life, they don't know the world, they don't know the players. Your telephone number will be monitored.
Welcome, everyone, back to the Alpha Capital YouTube channel for another trading podcast. I'm your host, Words of Wisdom, and we are here with the one and only the king of prop firms. I would say the number one prop firm trader in the world, personally. I don't know if he will accept that title or not, but we'll find out in a minute. And it is the one and only Kyle, a.k.a. JadeCap FX.
How's it going, Riz?
I'm good, thank you. I'm good.
I might not be number one anymore. Andrew NFX might be overlapping.
No, well, this is what I said to him today, actually. You'll find this funny. All his titles say number one band trader. So I said...
I can't argue with that.
I said, bro, you need to change that. Like, that's not what you want to be known for. You want to be known as the best.
Yeah.
But yeah, no, but it's great, though. It's great to see, people like yourself, people like Andrew, still crushing the game, Because why? I would say that because you come with edge, professional mindset. You've showcased that consistently. I don't think anything's changed over the time that you've been posting or anything like that.
Yeah.
And it's incredible to see, man. Incredible. Obviously, with Alpha, just recently to mention a payout, obviously, I think it was, if I'm not mistaken, just under 50K?
Yeah. Oh, 40K.
Yeah.
50K, like, profit, and then my split was 40K.
Yeah.
Thereabout.
Incredible. Absolutely incredible. It just shows that you're still going. Still going.
Yeah, man.
Those on what? Is that on 400K capital?
Yeah.
Yep. Nice.
But obviously, there's been a lot of change in the space.
Yeah.
Right. So, trying to stay even keeled and consistently trade, it's almost like you have to block out all the noise and just focus on trading properly.
How's that been for you? Actually, that's a good point that you mentioned there. Like, since we've last spoken, or people may have seen you on a podcast, that has been a huge transition.
Yeah.
You were like very patient. From what I can see, you haven't really done that to a very large degree, anyway.
It's something that takes a lot of time, obviously, right?
It's interesting you point that out in terms of the people who entered during COVID. They may have made money on the way up. A lot of the time, not only did they just leave after it came down because they're not used to it, they lost their money as well that they made. Maybe even money on top of that, which is so interesting because it's like, people think it can be easy when they're in those moments.
Yeah.
They're hitting a good
ride. It's a tale as old as time,
Mm-hmm.
They say you're a genius in a bull market.
Yeah.
Right.
And we might be seeing that change, happening relatively soon. We're seeing a lot of interesting things happening all at once. Markets indicating quite a lot as well. But another interesting point just to ask you about in terms of, just off the back of what you said there in terms of the risk, were you more using the 0.25% risk as, I know you were still dynamic even back then, but you were using more of a 0.25% because you had such a large capital as well. So therefore the 0.25% was still quite substantial size.
Yeah, exactly. So now that my capital base has probably been cut in half by 3/4, right? So like instead of trading at $5 million, now I'm trading at like 1.5. It's a huge difference. So not only am I risking more, but my risk of ruin goes up as well. So I'm at higher risk of blowing the accounts and then having to get refunded again and go through that process all over again. So yes, there's pros and cons to it, but it's just me having to adapt because I'm used to that level of income and I have the experience to be able to trade high risk like that. Whereas, if I was still funded with $5 million, I'd probably still be trading conservatively because I wouldn't have to do as much to make the same amount of money.
Mm-hmm. It's so interesting when you point these things out because a lot of people don't experience that, right? They're still trying to work towards getting that large scale funding. Mm-hmm. So it's an insight they get to have, and very similar to what Omar said on a previous podcast, is that people have to learn regardless of what you say, but hopefully they can pick up on the point of that, not only the experience, like you've got the experience, you have the edge. Those two key points there, because you've been trading in terms of actual trading like over 10 years, right?
Yeah. So before I even found the first prop firm, which was FTMO, I had been trading for 8 years already, right? So like before I even touched the account, where a lot of new traders that are coming into the space, they don't even know what spread is, right? They don't understand what a bid and ask is. But having that experience going into prop was just like, all right, well, I already understand how to trade. I just have to fit my system that I already have into the parameters that the prop is giving me. I'm not trying to go into the challenge trying to learn trading while passing the challenge at the same time, which is what a lot of traders are trying to do right now. And I don't blame them. It's like, well, all right, well, I put $5,000 into a personal account for many years trying to flip that account. Well, all right, well, it makes sense for you to invest in your education and to learn trading at the same time with the possibility of getting paid out with a prop firm, because I can't tell you how much money I've blown in a personal account. It's definitely into the tens of thousands, right? But it's a learning lesson. And it's the same thing if you're failing prop firms. Just because you're failing challenges right now doesn't mean that you can't pass them in the future. And it's not scammy, right? There's a risk of every business failing. It's just a cash flow issue, whatever the case is. You have to take that risk, right? Because it's the same thing if I put my money into Oanda. If they go under, they're not FDIC insured, so I'm not going to get my money back. There's always a risk in that, when you're operating in capital markets, there's always the risk of you losing money. That's just plain and simple. And you have to be comfortable putting that money into whatever vehicle it is that you're trying to trade with.
Definitely. And if I'm not mistaken, you've done over $1 million in payouts in total.
Mm-hmm.
And obviously losing this much funding as well can be very alarming to your monthly sort of P&L, not P&L, but your monthly income when you are profitable and getting these payouts, right? It's a large shift, no doubt, in comparison. And the reason I'm saying that, though, is that, someone in your position where you're making that much money and you're making that sort of returns very easily could be spending quite often, increasing the
lifestyle.
monthly expenses, and your lifestyle. But from my observation, from what I can see, you haven't really done that to a very large degree anyway. Why is that? Why haven't you done that? And or if you have, you can share with us as well, hopefully. But why haven't you done that? And how important is that, do you think, as a trader or just generally someone who's trying to be successful in this day and age, and you are starting to make money? Why is it so important to be very careful of that expenditure?
Well, so it was really a story that Tom Donati brings up like pretty often, and he said he's seen multiple traders come in the space, make a ton of money, and then at some point they're not able to keep it. So I'm always trying to protect the downside, whatever that downside is. Maybe I have some other expenses coming up, emergencies. Just overall, I own a home in New York. Obviously, if something comes up, I have to pay for it. Like I'm not gonna go out and spend. There's a certain bucket that you should have for discretionary income, right? So when you're losing a big chunk of your monthly income, you should be able to sustain the lifestyle that you have, pay for all of your expenses, and then maybe just shrink your discretionary income where you're not spending as much. And I think even when I was making, upwards of 50, 100K a month, I still wasn't using it for a whole lot. I just noticed there was a lot of prop traders that were, maybe they're a little younger, whatever the case is, just buying cars or buying liabilities essentially, and not understanding that this might not last forever, right? And that's kind of what you see. Like, obviously, if your back is up against the wall, if things start disappearing on you, right? Now all of a sudden the ability to create income goes away, right? And now what are you going to be stuck with? You're going to be stuck with liabilities, and you're not going to have the safety net in order for you to continue trading for a living, which is always in my perspective, I'm never trying to go back to work for somebody else. Like that's just like the last thing I'm trying to do, right? So I'm always giving myself a buffer, which we've already talked about. Before I went full time, I had saved up almost 2 years of expenses, which is way more than what people probably should. It's just I think the biggest hump is obviously being comfortable leaving your job, right? Because I was leaving behind a decent career.
Would you say then, based on what you said there, and even like with the risk, everything that you were talking about before, would you say that you're not necessarily a very high risk taker, if that makes sense?
At times I am, at times I'm not. But I would say overall I'm not a high risk taker, because I think I've always made more money just being way more conservative, because the market's going to do most of the work. And it's those times of high volatility where a lot of people will give back a lot of what they made. So I'm always trying to be mindful of how much risk I have on. And, if you want to make more money, get better at scaling in and adjusting your stops. So if you want to put on a bigger position, don't, add in while your stop is in the initial area. At least try and cut the initial risk in half. Let's say if you have a 10-point stop loss, try and reduce it to 5 before you add another position on. And it's just like poker, right? Like if you have a really good hand, you're not going all in on the first on the flop, right? You need the other until the other cards come out. Then you actually know, all right, well, now I have a real edge against my competition. Then I can start sizing in. And I talked about this with Omar a little bit, like just throwing out a feeler position in the market, because a lot of times if that market goes directly against you, the worst thing you're going to want to do is add or be at full size, right? Because as soon as you throw that position out there, if the trade's not going your direction, why would you want to add?
It seems like common sense.
Honestly, it seems
like it. But,
it seems like common sense, but
it's easily done. Though. What do you think? Do you think it's human nature just to sort of want to get into a trade? You think, okay, I've done my analysis. It's saying this.
Yeah.
Let me get in.
It's all behavioral actions.
Mm-hmm.
It's all your habits, define the results that you have. And if you have a desired outcome that you're trying to get to, I've been listening to a lot of James Clear. He had the masterclass on atomic habits.
Yep.
So really, if you have a desired outcome, you have to make sure that all the small habits that you're doing lead to that desired outcome. If you are somebody that tends to overtrade or tends to over leverage, those habits will just keep stacking upon each other, and then you're really building poor habits, which it doesn't pan out well in trading. All those things that you're doing, without realizing, it's all self-awareness. You have to be aware that you're constantly over leveraging or constantly adding into positions that you shouldn't be. There's all these different poor habits that amateur traders have, which when you're in flow and you're a consistently profitable trader, it's almost the opposite of that. You have really good habits when it comes to the small things. And that's the biggest difference, I think, between really great traders and really poor traders, because there is a really wide gap.
Yeah. Yeah. What would you say those habits are?
Honestly, it's having an edge but sticking to the edge, because it's so simple to put together, let's say a 3-step edge or a 4-step, 5-step edge, system, trading plan in place. It's just how can you follow that system day in, day out? And a lot of times your emotions and like your behaviors are derailing you from following that system. Maybe you're getting angry and you follow, let's say you follow the rules on the first trade, but then your emotions, kind of put you on tilt, and then all of a sudden you're going off plan, and now you're taking a trade that you shouldn't be in. Now all of a sudden your position is offsides, whatever it is, and you're basically on autopilot mode where your emotions take control of you. It's really the fight or flight mechanism. It's just, how do you actually emotionally react to something happening?
Would you say that you go through a process then when developing those habits or trying to develop habits to help you? You first have to try and be more self-aware and sort of journal or track how you're reacting, as you say, so that you can pick up on the patterns and negative habits.
Yeah, exactly. So there's not only is there patterns in the market, there's behavioral patterns that, traders fall into. Let's say if you just wake up late and just hop on the screens. That's a behavioral pattern that you have to recognize that this is probably not beneficial to my end desired result. So you have to start changing small things here and there. But what I noticed was you can't focus on every small task at once. Let's say if I'm really poor at risk management, right? And that's something that was a really big, I guess, needle in my side was the risk management. I really made it a point over a couple of years to only focus on risk management because I already had a simple edge that I was trying to follow, right? It was like the fair value gap and the Judas swing. So all I would focus on was making sure that last piece of what was holding me back the most, because I would have good trades, I would have bad trades. The one thing that would kind of put me on tilt was if I took a position that was too large and I lost, because the one prior to that, the trade could have looked the same. It's just as soon as the position size changed, now all of a sudden my emotions changed behind that position. And that's something that is another skill, obviously, is to be able to detach from the outcome of a specific trade. Because you're going to have winners, you're going to have losers, but if you follow the same process, then you kind of have to submit your control to the markets, because Mr. Market does whatever he wants to do, right?
Going back to something you said earlier about poker in terms of the newbie trader and using analogies, and they always want to go all in. It's interesting you mentioned that, because when you don't have edge, right? So let's say poker, when you don't have the cards that are really going to perform well, right? And you don't have a card that has high probability of succeeding. Don't get me wrong, sometimes you see a professional not have good cards, but
they're bluffing, yeah.
They bluff it, right? Yeah. And they win, though. But you never see them do that every hand. Mm-hmm. You see them do it, and it's always a cool story. They did, they managed to beat the other guy and take him, even though he had the better cards. It's incredible. And you'll do that with the market, right, from time to time. But it's as you say, and I think it's very important that it's a good analogy, I think, because it's never going to work all the time. That's something that, yes, you find yourself in the position, you're feeling yourself as that poker player, you think you can just
unless it's your edge, because there's some poker players that are probably really good at bluffing, mm-hmm. but they understand that they are, right, and they can take advantage of it. Mm-hmm. And This was a documentary that I brought up to some of my students. Was Floored. It's a really great documentary of like pit traders. So essentially, the transition. Linda Rash was on it, and it was so interesting because you saw a lot of different floor traders struggle with the transition to electronic trading. And the problem is that
on your own journey, like the things that you did mistakes on, that you wish you didn't, and then move forward. If you're not willing to adapt, then cool. You probably hopefully
and you kind of have to submit your control to the markets because Mr. Market does probably really good at bluffing, but they understand that they are right, and they can take advantage of it. And this was a documentary that I brought up to some of my students. Was Floored. It's a really great documentary of like pit traders. So essentially, the transition. Linda Rash was on it, and it was so interesting because you saw a lot of different floor traders struggle with the transition to electronic trading. And the problem is that they're not seeing the emotions on the other side of the screen. So that's what I think is a really huge edge, is to be able to see beyond the charts and see beyond the candlesticks and just kind of paint the narrative of traders' emotions, right? Where are traders getting trapped? Where might they be panicking? Where might be the liquidity resting at a specific level? And I think really, again, you just have to be able to adapt because watching that documentary, right, you're going to notice that trading hasn't changed in a very long time, regardless of whatever new technology is coming out. Everybody's talking about algorithms, whatever it is. At the end of the day, it's very simple. The market's going to go up or it's going to go down. And it's about positioning yourself on the right side, right? And that's really all it is. I think a lot of traders overthink it. And they're like, well, if I learn this, it's going to give me a bigger edge. When a lot of times, that's really what I kind of learned from just constantly trying to dive into new things. Was I just realized over time, it wasn't adding that much edge to my system. And the biggest edge was being able to control my emotions or be self-aware of my emotions to be able to manage them properly.
So in the chase of trying to find new things to build a better edge, in reality, a lot of the time in that chase, it would actually probably negatively impact you.
Yeah.
Constantly trying to change stuff.
Exactly.
While, as you say, the biggest edge is in your emotions. Interesting you mentioned the pit traders, because I've thankfully been able to interview a lot of pit traders recently, and a couple of them just stopped trading after the pits.
Yeah.
After the pits closed, because that's what we've highlighted, is that was their edge.
Some parts of that documentary, the guys were like, this is like the end of trading. Yeah. Some guys were like, this is it. Like, I cannot make money anymore. And then some of the other guys were like, well, you wouldn't be saying that if you were making a fortune trading on a computer screen. Yeah. Right. It's just that guy was able to adapt and the other person wasn't.
Exactly.
Right.
Because it was interesting. One pit trader who I just interviewed earlier today, he was talking about order flow, order block, right? And normally when we think about that, we're thinking level 2, we're thinking, etc. But he was talking literally as in the room. Yeah. The orders in the room. Yeah. Right. And I found it not hilarious. Sorry. I found it so interesting and fascinating because it's the same terminology. Yeah. And it's the exact same concept as well. Because back then, that's where all the futures orders would actually go through the pits. Yeah, exactly. So it was this. It's the same in reality, which is different on how it's being observed and sort of how it's being shown. But yet, like you said, it's about being adaptable, and that's a prime example because, you know, if you're not willing to adapt, then cool, you probably hopefully made enough money from trading to go do other things or just live your life, which is fine. But if you want to adapt, you want to continue trading, you have to be able to adapt, right? And it might not be easy. Just like with yourself, obviously, you know, making that transition to futures for a bit. Are you still trading both, or you just? Yeah, I'm still trading both. How's that going? Like, what was that like for you?
There's different nuances. There's different nuances. Like the markets move at different times. Obviously, it's way more volatile, so there's less spread. There's zero spread, actually.
More volatile in futures. Yeah,
yeah, because the majority of volumes coming in the AM session very quickly, whereas Forex, there might be some moves overnight and then some moves during the AM New York session. So it's more spread out, whereas futures, like the volume is more concentrated. So it's happening way faster, and you can really trade like the 1 to 5 minute charts. For me, I think I still prefer swing trading because I think as I mature in my trading career, I've noticed that when I'm intraday trading or scalping the low time frames, it requires so much mental energy and concentration that I feel like it's a full-time job, you know? And I didn't get into trading to have another job, right? So trying to balance that out has been a little bit different, and it's really why I still prefer the FX space. But obviously, there's tax benefits to trading a personal futures account, right? I think 60% of it gets taxed as either long-term or short-term. It's like 60-40.
And was there any difficulty you had in terms of that transition?
No, not really. Like, what I try and do is detach from whatever name I'm trading, whatever time frame I'm trading, because a lot of times my daily setups, like if I'm taking a trade on the daily chart using the weekly or the monthly, and it's a swing trade, a lot of times it's the same exact. I'm looking at the same exact setup on a 5 minute or 1 minute. It's just the feedback that you're getting is way faster.
Yep.
So you have to be more dialed in. You have to be able to analyze the data very quickly, which, again, I think a lot of traders, they get into that side of the space very quickly. They're like, oh, if I take more trades, I can make more money, right? Yeah. And it's like, no, you have to be able to analyze the data, the incoming data, faster. And if you don't know what you're doing, right, it makes it that much more difficult. So you have to be able to have an edge and understand how the market's moving, understand order flow. And to me, I think it's way better off if you try and do it at a slower pace, right?
Do you still trade euro on futures or?
Mm-hmm. Yeah. So I'll still trade currency futures, but also a little bit of Nasdaq and ES.
Interesting. Yeah, because I know a lot of people may be going through a similar process where they're losing funding and looking at the future space, and I think it's important for people to understand that and hear from people who've gone through it, that it's not impossible and it doesn't have to be.
Well, I've learned a ton just from some reading books and just doing a lot of research in the space. I just love trading, right? And Luke Belmar actually brought up this book on your podcast, Reminiscences of a Stock Operator. Back then, there was no electronic trading, and if you wanted an order filled, you had to call into the floor. You had to be on the floor to place your order. So you needed to go through a broker, right? And sometimes that order to get to the floor would take days. Like they would send telegrams and stuff, and it would take like 3 days for the order to hit the book. But what I learned from that book were a couple things. First of all, just to educate the viewers, it was about a trader from, I think, the early 1900s.
Yep.
And he basically, he started out just reading the tape and trading in these bucket shops. But the biggest takeaways that I learned was he was able to corner multiple markets. So he started out, I think, in the coffee market, and then he moved to like plywood, soybeans. But he was only trading one market at a time, and he was a specialist at it. But he ended up being like the biggest trader in those markets during multiple at different times in his career. So he moved from the coffee pit to the soybean pit or the plywood pit, and he was only focused on that one market. He wouldn't go from soybeans to plywood the same day. He would just corner that one specific market, learned its nuances, and then really took advantage of that. And then another thing that I learned from that book was leverage. Right? He had built up fortunes and lost fortunes multiple times, and that was just something that I think every trader should take a lesson from and try and use that as a case study to never do that. Because the quicker you get the profits, obviously, the quicker you can lose them as well. So,
in terms of the process, there's two types of processes. One, obviously, you observed your own journey, right? You can reflect now. Obviously, when you're going through it, it's a bit hard to observe it in that way. But you get to reflect on your own journey, like the things that you did mistakes on, that you wish you didn't, and then move forward. And also the things you've done right over recent years, of course. But equally, now you're in a position where you get to observe other traders, right?
Yeah.
And see what mistakes they're making, but also try and help them stop making those mistakes and to help them become more profitable. Is there anything in that journey so far that you've noticed, in terms of mistakes that traders are making maybe on a more common basis? Seems to be quite a common trait among many traders.
Yeah. I think the biggest thing that stands out to me is nobody likes listening to advice for whatever reason, because a lot of the advice has been preached for years on end. It's never really changed. It's just for whatever reason, people think they have the better way of doing things. You could tell somebody, don't over leverage, don't trade this specific day, because there's certain weeks where I'll just avoid trading entirely because I know the market's going to be volatile. And putting myself in the shoes of somebody that would possibly be trading for a fund or something, you have to understand the exposure aspect of it. Like, you wouldn't be allowed to trade during an NFP week where there's FOMC rate announcement. There's all these other things going on, end of the month, end of the quarter, whatever it is. You have to be able to be flat on your positions. And I guess just what I've noticed is people don't really take advice for what it is. Everybody says you need to journal your trades. Everybody says you need to stick to proper risk management. Everybody says that you need to obey the rules of your system. And it just seems like everybody does the opposite of that. right? And it's so interesting to see because even ICT would tell us, all right, well, what was the one thing he said? You should demo trade for 3 to 6 months, and I lost a ton of money because I didn't listen to him. It's just like the rebellious aspect of human nature. We just want to try and reinvent the wheel, for whatever reason it is. I can't put my thumb on it.
Do you feel like it's just because trading, in particular, I'm sure it happens in pretty much all skill sets, where people are trying to learn, but especially in trading, do you think it's just the notion of that one trade can change your life?
Yeah, possibly. I mean, I think a lot of people chase that, and that's where it turns into a casino and not, a probabilistic marketplace, where, the ability to possibly, multiply your money in a very quick manner, that's really what the market is kind of engineered to do. It's engineered to get those suckers into the marketplace, and it's part of the game, and you have to be able to play as the house, where you're going to wait for your spots, right? And the law of large numbers should be able to carry you if you're doing the right things. Because, I've had multiple months where I've been flat, and then that third or fourth month make it all back. But you can't do that if you run out of all your chips, right? So you have to be able to be nimble enough and be cautious enough and conservative to protect your capital.
Do you recognize, even at this point, that you have like you talked about having flat points for multiple months there, but even like, let's say more recent, let's say this year, have you had periods where you've had like a losing streak?
Yeah, absolutely. Like,
what does that look like for you?
So I had a 100K day, the last day of the year, last year, right? Like this, I can't remember what it was, December 27th or 28th, going into the weekend. And then I went on a really big losing streak right after that. It's just overconfident. And I should have known better, right? Because it's happened to me before. Like, just getting that overconfident feeling. You think you're better than the market. You think you understand the market. And again, like Tom Dancy says, like, you're only as, I don't know if he says it, but you're only as good as your last trade, right? And when you start going on the losing streak, the best thing that you can do is just step away from the market and give yourself some time to like reset. Because if you don't do that, you're just going to you're going to be on tilt essentially. And that's why it relates so much to poker, because being on tilt, you're not going to really play your way out of tilt. Like, if you're on tilt, you have to be able to step back, reassess the situation, and then wait until like you have to be aware of when you're going to be back in flow. And sometimes that takes a while. Like, I think Sanglucci actually talks about it. Like, you have to understand, when he takes huge losses, he just steps away for a bit, and then he's going to get right back into it. But he's going to know when he's ready to. That's the difference, is not trying to push it so hard where it's like, I need to get in the market now and make it back.
All right. Okay, so I don't know how long I've been unmuted for. Like, this has been crazy. I thought I was silent. But yeah, we have been in and out of the market. We have been watching price fall. We didn't get that retracement that we was looking for. I'm going to cancel this now because our target has been hit, and we was looking for this new day opening gap. And if I can show you around this time, just before Asia, 6 o'clock candle where it goes from 4 to 6, that was our target for this big dump that we had here. We saw this, we wanted to get in this on this fair value gap. We got in very, very late. I think we got in here, but price just fell. It looked good. There was a few positions that we wasn't able to capitalize on, some that we got out a lot quicker on. We took a loss on one of them. We had the window up. Hold on, let me just get this window up. C trader, yeah. So on this window, we was in and out quite a bit. We took a loss, and then we was buying. I don't know why we was buying. I thought we was going to get some kind of retracement from here back up to here, so I thought, well, I'll buy that. I think I got in a bit too early. It didn't breach the 40%, 50% of this gap here, and then it just dumped, right? So that was that loss there, and then the rest we did quite well. 2.2% up after taking that L, and yeah, so pretty good day. I don't think I'm going to get back in again, even though all of this looks so juicy, but I'll probably just demo trade this. But yeah, that's my day done, and yeah, decent day. Don't think I'm going to be trading tomorrow because it's Friday. I was up quite a bit on this account, and I kind of was like crazy amounts. I was pushing it. I was up like 4%, down 4%, up 2.2% today. So I think I'm just going to leave it and just be up 2% for the week. Trade it again next week. We got some exciting things next week as well, payouts and stuff. So I'm just going to put that into new challenges and go again. So an hour in and out of the markets today. I'm going to put this in the journal, and I'll catch you guys, if anybody is watching, another time. Cheers.